What's your take on what's going on?
Well, after yesterday, I'll say they're swinging in and out of gains. So we're going to take this as a positive, glass half full. Right now, we had economic numbers out of the U.S. that were really good this morning, and that really buoyed the market. We also had some rhetoric out of China that said, meet us at halfway. In the trade talks, that also gave us reason to rally. And of course, I think the biggest instrument in the rally this morning was Walmart, right? Their numbers, the concern was retail side. We saw that yesterday was a disaster on top of everything else, all that inverted yield curve garbage. We saw Walmart come out today and give good guidance on top of it, and that gave the market a little bit of a lift right now. And after that deep sell-off, it's probably good that we're, right around unchanged, and we're churning through a lot of different things.
Right, you mentioned the economic data was really good today, and even prior to that, inflation was, core inflation was over 2%. What else is signing a recession besides the bond market and the Fed?
Well, our bond market had to catch up to, the worldwide bond markets everywhere. With everyone having negative yield, we couldn't maintain where we were. So this was forecast months ago when the 2 and the 5 year crossed. That was the first sign. So this was a natural progression. It's not the greatest sign in the world, obviously, but it doesn't necessarily mean that we are led to a recession. Germany's been negative yields for a while. They're not in a recession quite yet. So it's definitely a warning sign, but it doesn't mean it's a harbinger for the market to crash. I think yesterday was a bit of an overreaction to an event we probably should have seen coming.
I mean, listen, Matt, I get it. As far as the 30-year bond goes, going to a new record low, do you see U.S. interest rates being negative at one point?
Well, I think there was an article the other day that there was a country, I think in Denmark, it was negative mortgages. They're paying for you to live in a house. How great is that? But you're competing. You can't be paying a yield that we were paying and everyone else was at negative yields. It just doesn't make sense. So, they're just becoming more in line here. That doesn't mean it's the greatest thing in the world. But that's what had to happen. Now our Fed is maybe behind the curve a little bit, but that all caught up to us rather quickly. And I think that's what's the alarm here, more than the fact that the 2 and the 10 and the 30 are at all-time lows.
Yeah, as you said, it's garbage. But Matt, you mentioned Walmart. They did very well. Stock is up today. Macy's, on the other hand, they had a lower guidance. What do you think about them? And are they not the bellwether for retail anymore?
No, I don't think they're the bellwether. I think retail, unfortunately or fortunately, is now based on the Home Depot, the Amazon, and the Walmart, the big store that can give you it all. Costco. Those are the bellwethers. Those are the pulse of mainstream America. I'm not sure Macy's is there anymore. Those niche type stores, they're just not cutting it right now in this environment, at least from the equity side. People want to be able to make sure they have same-day delivery or next-day delivery. They want cheap goods when they need them. Walmart has been able to weather the China tariff a little bit better than most, and their guidance was saying we are going to see an increase in prices, but we're going to be able to pass that along effectively with some other services. So they did a good job explaining to the investor, what is going on with the U.S.-China tariff in their instance.
I'm trying to think of a good acronym. You say Walmart, Amazon, and Home Depot. Is it WA?
I think Jim Cramer's got one. I think he calls them watch, but yeah, but I that's the new psyche of retail. There will always probably be a need for the Macy's and the J. Crews and things, but it's more of a niche, I think, now, and people want the bigger box store where they can get everything in one place, including food.
Yeah, let's be honest. Who doesn't want that? It sounds like a pretty good deal. Hey, what do you think about WeWork?
It's amazing. Now we've seen a couple of these, these Uber IPOs in size, not just Uber, but Uber and Lyft, these companies that have no idea how they're going to make money in the future, but tell us they're going to make money in the future. This is another case of that. $16 billion in debt due to the real estate that they own. The numbers are kind of staggering when you're losing billions of dollars a quarter, and you're telling us you're going to make it up in the near future. How? That's the question. We're starting to see that. People aren't as forgiving. That's going to be an interesting one. 3 classes of stock. That hasn't been, great for some investors, some funds have stayed away from that because they don't have voting power. So it'll be interesting to see when this prices and how the market's reacting at the time when they do price.
Sure, and they could be structured differently. But as I remember, I think you've mentioned Amazon back in the day was one of those companies that we were kind of basing trust on. But, now we're talking about Amazon all the time. Who knows?
Yeah, I mean, look, Amazon's done everything right as far as changing and adapting to the culture of where we are now. So you have to give them credit. They've done an unbelievable job. But, remember where Amazon started out as a little bookstore, right? They're no longer a little bookstore. So they've done a nice job.
They did. Only not with marriages. That's the only thing I would say about that. Anyway, thank you so much, Matt. Too soon? Sorry, Jeff Bezos. Matt, hope to see you next week. Have a great weekend.
All right, you too, boss.